All right, good afternoon, everybody. Happy Friday. Almost there. We've almost made it. We've almost made it. Feeling pretty good. Gonna give it just one more second to make sure everybody's audio is turned on. Hi, Perry. Good to see you. Oh, got my afternoon coffee, fresh brewed, ready to go. Hope everyone's feeling all right. As always, the question is, how are you feeling? The follow-up question is that how you wanted to feel? And if not, what do you need to do? What do you need to do to feel the way you want to feel? Okay, officially welcome to the Market Watch Group Weekly Market Wrap. I am Scott. I will be your host. As always, here are the disclaimers. As always, leave them up for just a second. You know them, you love them. Here is the agenda. We're going to look at today's market analysis. We're going to see what we think about this week relative to our market posture. Why do I do that? You might wonder. You're like, you're going to look at it now and pre-score it, then just score it again. I mean, how much can change between now and Sunday? Quite a lot, actually. In the way that we sit down and look at things, there's plenty of times where I'm like, oh, I bet this drops, and then it doesn't. I do it because if I can get a sense that, hey, my posture is actually improving, I'm thinking it's going to get a little better, then I might be more prone to carry a trade if I was on the fence as to whether or not I'm going to carry a trade. If I say, oh yeah, things are looking, better. So therefore what? Therefore, if I think my posture is going to go from 5.25 to 5.75, and I have some bullish trades, and I'm like, what am I going to do with these? I might say, hey, you know what? Let's give them a little ride still. Let's give them some room. So there's a reason why I like to revisit my market posture on Wednesday in the middle of the week and say, is it getting better, getting worse, staying the same? I look at it again Friday afternoon and say, is it holding up? Is it getting, and then we do it Sunday because it's an ongoing process. It's not like here it is, check back later. It's a fluid and adaptive thing. So we'll look at today's market. We'll revisit our posture. We'll talk about our mindset for trades being carried over the weekend in that order. We'll think about what we're looking at next week, setups, opportunities, windows, economic news, etc. We'll review the entire watch list and get a sense of where will the signals likely come from. Where are we thinking? We are wrapping up section 4, risk management, for our trading plan section of the week. Ooh, it's business as usual. So let me know if you have live trades on and you're wondering what to do, or you have an idea but you want to validate your thought process. I am certainly open to it. If you want to have some live discussions. Otherwise, let's just dive right in and get into it. Here's the market. What do we have going on? Flat, marginally down 0.07 on the S&P. Kind of a doji. We tested a little higher. We tested a little lower. We're just still kind of hanging out here. The volume has dropped off significantly. Right? There's the buyers are certain that the buyers seem to be taking a break, but we don't see much by way of the sellers yet. That never lasts for very long. Again, and you can see I even have like this would be nice and confirm a 2. If we pull back and can bounce off of this, that looks fantastic. Might be evidence of a trend acceleration. Is it enough that I'm going to rescore it? Well, we'll talk about that in a second. So here is our trend, or our daily activity. You can see how things went down. Weigh in if you'd like. You guys know I love to hear from you. So give me your thought process. We opened, we tested higher. We just couldn't hold on. For 5 minutes, we got through this 488. And then we dropped back down, and then we tried again, and we just couldn't get through it. And then we've dropped again, and now we're here. We seem to be rolling over. So one more time, the buyers are like, oh, let's give it a shot. But that was a pretty half-hearted effort, if you ask me. So I increasingly see this, especially with the market being in an overbought position, as indicative of a consolidation. When we think about a hedge, I got to ask, are you still, is anyone still holding swing trades that are bullish through this? At this point, we have 3 days in a row at this level. It's now a weekend. I got to figure that you're taking profits, have already taken profits. If you're carrying, if you're probably not carrying much, let me know if I'm wrong. So for me, a hedge was less important, right? A hedge was less important, but still viable. Let's look at the VIX for today, and then we'll go through our full. Well, let's just go through our posture. Would I score this higher after today? Real quickly, let's talk about what happened today. The Fed got the inflation reading it wanted. That's the big news. We've been talking about that. Did it kick it to next week? Yeah. Let's go to last week. The big news was we came in at 2.6 year over year, 2.9 even on the core number. Everything looks good there. Income was up as expected, spending a little faster. Now, that could be good, that could be bad. Now that we're not worried about inflation, spending coming up a little bit could be helpful to make sure that the market doesn't slow down, right? This is where the whole soft landing, well, we need to start, getting going again. That's what we're watching for. We got a great GDP number on Thursday, 3.3 when only 2 was expected. That's very strong. Employment number stayed strong. So remember what we said. What would we love? We would love a GDP above 3. We would love a inflationary data below 3 and as close to 2.5 as possible. I mean, we're kind of in that situation right now. Employment stays strong next week, just in preparation for what we're looking for next week. Next week is a labor market week. Tuesday, there's a consumer confidence number. We're expecting it to pop. People are feeling much better about things, much better. We're expecting job openings to be close to 9 million, or that's what it was last time. I don't know. They've given, no, they haven't forecasted yet. Last time it was there. Anything 8.5 or better is fine. ADP last time was 164. They're expecting 140. Last time they were expecting 110, and they got a positive surprise. Jobless claims expected to stay in this 2% or 200,000 range, in a great place. Anything under 250, we have no concern at all. Last time, 216, also positive surprise. We're only expecting like 140 or 150. Big jump. This time expecting 180. 180 is in a expanding labor market. 150 is maintaining. If it starts dropping below 150, we get a little concerned, right? We haven't even come close to a negative, a month where we lost, right? Where it's like, oh, we had a little blip where a lot of tech companies, laid off 10% here or there. That was it. Everything's fine. And the Fed was like, hey, we might lose a couple million jobs. Nope, not happening. Very strong what we're seeing here. So the news is coming back good. Let's just glance at this for today. And you can see the semiconductors getting pulled back primarily by Intel's negative earnings, but this is fine. All of these things were overbought. AMD was overbought, NVIDIA overbought. All of these, you're really managing for profits and then hoping for the next opportunity. So this is good. I want to see these things consolidate. This doesn't concern me at all. Everything else looks pretty positive overall. So it's just the tech that was weighing it down. Not concerned. I'm not concerned. Tell me how you feel. So if you did, Bob says he is carrying a few bullish trades. Is it worth a stab? Sure. There's plenty of evidence for bullishness here. What we're looking at is anytime we have an opportunity, let's get our chips on the table. Let's give things a little more time and consideration. Definitely willing to take anticipatory trades. Definitely willing to get multiple trades on in any given sector. All systems are go for me right now. Watch list, or excuse me, the Fed closed out several yesterday and today. I'm assuming for profits, so well done. No expectation in January. Here's what I think is nice. A lot of times when we adjust expectations, it's because the market pulls back. We've adjusted. We're now actually close to 50-50, but the odds are ever so slightly in favor of no cut in March. 50-50 for now. If they cut it, the market loves it. We're rallying. It's going to take our February and March rally and kick it through April. April's a good month anyways. So do I think a little Fed news to just finish the spring rally through April? Then what happens? Sell in May and go away. No, we keep trading, but we do expect it to turn sideways, where you might look to implement more sideways option strategies, calendars, and butterflies. May, June tend to be very stagnant months. We'll still try, but we'll set our expectations appropriately. So does this Fed story match a nice bull run through the spring? I think everything's in place. Everything's in place. So posture wise, what are my thoughts? January. Okay, so sorry, I'm a little distracted. I keep hearing my dog and he's whining, and he does this thing where he goes into the bedroom and then he closes the door. And as soon as he closes it and he locks himself in, he whines about it. It's like a cry for attention. I don't know. It's kind of hilarious. I actually had to film him. I put a camera up and filmed him doing it because I'm like, is he shutting the door? And anyway, he closed himself in, and now he's all sad that he locked himself in and no one can get him out. Okay. Let's go through this one at a time. Let's start. So if you hear a bird chirping, it's not a bird, it's a little crybaby. Let's go. Yeah. Okay. So you can see we've seen this story before. And last time it pulled back and then it couldn't get going. It ran into some steam. Our thought process here is we're looking for this acceleration. I'm not gonna score it yet because it's just 1 week outside. But I am getting ready to think about maybe I will actually. I might, if there was a little bit more volume here. It is actually our second week above this trend. I can't remember if we scored it higher here or not. I might actually drop another quarter point. This thing could be trying to accelerate a little bit and maybe find a, let's see if I can draw what might a new trend look like through here. Maybe it speeds up something like this. And that would be a better score, right? I would score that more like 1.5. Okay, you know what? I'm open to it. It might be that we kick our long-term score up a quarter of a point. Weigh in if you have any thoughts on that now. If not, think about it between now and Sunday. I want to hear your guys' thoughts on if that is a viable. I'm thinking about it now that I see it second week in a row. It's been a while. We were up to 1.5 back there. I think I might do it. I think I am going to kick that score up a quarter of a point. You guys are so quiet today. I know my voice is soothing, and sometimes you like just lean back, close your eyes, and just let me take you to a nice little afternoon nap. Trending towards the original, keeping it as is, Sandy. Okay, fair enough. Fair enough. I like the way that it's breaking. Now, here is, we did score this higher not too long ago, right? No, it has been a little while since we've kicked it up again. So we've been sitting at 1.75. Yeah. Okay, same kind of a thing. If I'm able to start to think about this line here, I don't know. That still looks like maybe a 1.5. It doesn't look that strong. What would it have to be to get to a 2? I'd really have to like, I'd have to see something like this develop. Um, so yeah, I think 175 until I see that, then I'd kick it into a 2. If we get just a small flag pattern and kick out of it, I think I'd raise that. So I think I'm going to raise the long term, but keep the short term as is. But overall, gets me a 1/4 point. Volume, I think, is going to stay the same. There's no new volume. I don't see anything that would cause us. This still exists. As soon as this falls off, you might think, oh, well, then we'll score this to a 0.5 because, it's the only volume we have. But I think actually, if I don't get any new above average volume days, I might just leave it at a 1/4. We'll see. I want that volume score to be a little more stable as I watch it fluctuating up or down. Major market. Industrials look stronger. Financials held up. Consumer discretionary looks like a little bit unstable. So I think having having scored it down last week, probably it'll stay the same. I don't think it'll drop. We'd have to lose 2 sectors to drop it to a 0.5. And losing only one, it's going to be fine. So I think that's going to stay the same. I think major market, the small caps, the IWM actually showed some resilience. We recently dropped it to a 0.5. Maybe. I'm open to it. Probably going to stay the same, maybe. And then we have the VIX. What did we have on the VIX? Let's get this back. Press said, been a choppy week. The big 7 semis pushing up the averages, not hitting the rest of the stocks today. Something positive shift. Yeah. I agree. I think as you go through the watch list, you'll see that there's still differentiation amongst the sectors in the cycle. So right now, some things are just barely coming to a close. Other things have pulled back and are maybe starting to show more signs. Yeah, let's just make sure we keep a comprehensive perspective so we know where the money's going. Obviously, there's always increased interest in the big 7, but I think we've been able to find some good spots where the money's going and it moves outside of that correlation. And the data does look good, right? The data is showing up. As we think the Fed looks more prone to cutting, that's the motivation. Don't fight the Fed. Because as they are prone to cutting, that's going to give fuel to the small caps. Small caps is that final piece of the puzzle we're looking for. And everything, as long as prices stay down, you look at energy, gas, oil is down, inflation down. Yeah, we seem to be unencumbered. It looks pretty strong. Absolutely. Okay. The VIX is where I said I was going. I just haven't gotten there yet. Give me 1 second. VIX. Okay, so we did have, if you are a stickler to theory, theoretically speaking, we had a higher low. The bodies definitely, even the shadows, by like 9 cents, but it was a higher low. It wasn't confirmed until yesterday, right? Here was still underneath the prior day. Here we're definitely above. So you might be thinking, oh, well, now we have a red candle. So is it a lower high? No, right? Because it has to take the whole body out. If tomorrow we close below today's low, then yes, then this is immediately reversing to a lower high. What would that mean to me? It would mean any hedges or bearish trades I had, I would shut them down immediately. And I would be thinking I should have a trading window that I should be putting trades on. I would be thinking that the market is likely bull flagging. So yeah, I'm thinking this would be indicative. Now we don't have it yet. That wouldn't be till Monday. What do we have today, though? Honestly, I'm going to leave my score as is. I don't. Technically, it was a higher low, but visually, it looks like a same low. We got back below the 50. We're already starting to show signs of like not getting back up to this level. With that in mind, I'm not going to add, nor am I going to take away. If we get a lower high next week, then that's going to take my score back to a 1.25. And then when we get a lower low, meaning we get below this 12.5 again, I'm back to 1.5. That's all it requires. So if next week, let's say next week we get a doji, and then it comes down, and then it hits down here to 12. That would actually be 0.25 here for the lower high, 0.25 here for the lower low, and I would take my score from a 1 to a 1.5. Right? So if I only get the first piece of it, only a quarter. But for now, score's going to stay the same for me. Give me your thoughts. Weigh in on how what's it telling you? What's the story? Every indicator, every component we look at here tells its own story, and then we add those up, and we say what's the totality of the story. So we look at the short term, the long term, and the story was possibly a breakout, possibly an acceleration, improving this. The short term was already at a pretty good place, not quite where we would accelerate it to a 2, but we know what it would look like if it were. Great. That's a bullish story. The volume, nothing new. The last bit of selling volume is getting closer to falling off. We're thinking stable in a slightly positive area. Still bullish, though. Still a bullish story. We look at major market and we say the only thing that maybe happened was the small caps showed some resilience that might kick that score from a 0.5 point to 0.75. No chance it's going to show lower, though, right? There was nothing there that's like, oh man, this was really negative. Same with sectors. We imagine sectors is going to stay stable at a very strong score, even at a 0.75. Lastly, what's the story of the VIX? What is the institutional? This is the institutions. You're sitting next to them at the table, and they turn their cards a little too much. They're giving you a peek. Only if you're looking at it the right way. A lot of people look at the VIX and they just get bad information from it. They're like, oh, isn't that like a put-call ratio? No, it's not at all. That's absolutely not what this is at all. This is implied volatility. This is a very sophisticated mathematical formula. There's a white paper you can read about the actual VIX, which is implied volatility on the SIBO for the S&P 500 index options. That's the same basic formula that they're using to give us the implied volatility for individual stocks, but this is the gold standard. This is telling us a story about where the institutions go to potentially protect themselves. Why are they potentially protecting themselves? Doesn't matter. Doesn't matter, right? If they are doing it, we're concerned. And if they're reversing course, if they're unencumbering themselves from these hedges, that's information too. That's why we pay so much attention to this. So what's the story telling me? The stories, we've been concerned this entire time, since back here in the first week of December until now. We've been concerned because you can see that the VIX has been kind of elevating a little bit. There's a bit of escalation, nothing parabolic. That's always our concern. Look back in September when it went parabolic. It went from 12.5 to 18, 20 in a week. It hasn't gone parabolic, but it has definitely had concern. If you look at our scoring process here, the VIX was quite a strong thing up right around here until December 10th, December 17th. And then we said, wait a second, something's happening here. So I guess it was the middle of December. And you can see it was right around here. It's this first time when it broke out. That's exactly right there. We're like, whoa, we don't like that. And it just never really came. It just couldn't shake it. Kept just popping a little higher. And then all of a sudden right now, this could be that first confirmation of ease that it's like, okay, we didn't on this cycle, it didn't accelerate, it just eased. This is really strong information. But it's a very subtle analysis that gets you to that point. So I definitely, when I get to the VIX, and as you go through each of these components, what's the story? That's what I want you thinking about. I don't want you thinking like, how do I get to the number? It feels too like, oh, I'm a computer. I want the story to be a part of this because that's important for us. We're using a very objective approach so that we can kind of just be like, okay, what does this mean? This is happening. What are the implications when I see this? My implications right now, all like I said, all systems go. I'm expecting the posture to improve a quarter, half a point, maybe. Maybe not back to 6, but high fives, 575, beautiful place to be as we watch the market start to maybe consolidate. Yeah, I'm looking for hopefully 2 or 3 strong trading windows over in spring, February, March, April. Bob said, what do they know that we don't equals cause for us to pay attention? Absolutely. Of course they know more than we do. They have people everywhere. I don't have any people, just you guys. We have each other. That's it. It's a good network, but we don't have, political inside information. We don't have institutions have a lot of money. They know things for sure, especially the smartest ones. And that's who we're relying on the early signs. For now, we are enough. Small but mighty, the Market Watch Group. That's it. Okay, let's hit the watch list before this market closes down. Let's ping through it. Healthcare was interesting. I took a stab at one, didn't work out. Really, mostly a break even. You can see it tried again, still kind of failing. Apple's consolidating. Fine, looks fine. The problem is, I don't know that we're going to get time to get a trade on, maybe a few days, but then earnings, AIG, just kind of hitting some resistance. I'm looking for I was in, already took all, actually, waiting for the pullback now. AMD, I missed that one, but I'm waiting for a pullback. Unfortunately, you've got earnings coming up. This is where I tried. Got in, got back out, kind of a wash, and then it turned. I'm like, yeah, what are you going to do? So no, I did not. I was out here. You too, Bob? Yeah, it would have been nice to have stayed in. But look, the signal said get out. It told me to get out. So I did. That was a weird one. I don't love healthcare. I don't love healthcare. I only did one trade. It was a wash. I can live with that. Amazon may be running out of steam. AXP. Yeah, I did do that one. Did I hold through earnings? No. I mean, of course I wish I did now in hindsight. No, I got out. I closed the rest of it yesterday at a high. It was great. I made a piece. I was thinking, hold just one contract. I just didn't. I should have. I feel like that's okay. If you ever are like, you know what, I'm going to hold one contract. Hold one. I don't hold through earnings. And I'm not going to let this influence me other than, you know what, maybe I'll hold one in good markets. Right. Part of the game. Boeing, nothing there yet. Right? That's it. Sandy, she said you couldn't have predicted that. It's not the norm. It's exactly not. We can't hindsight bias, be like, oh, should have. You know what it is? It's those guys. I had friends, we'd play poker. And whenever we'd finish a hand, if they folded, they'd be like, let's see what the cards would have been. I'd be like, why? They want to see, like, what if I would have stayed in? I'm like, well, you didn't stay in, right? Because either I bluffed you out or because I was too strong and you didn't want to keep paying for cards. But it's like, what do you want? You want to see what would have happened so that next time I would play differently? I don't know. I never understood that thought process. So Costco. Yes. Although Costco looks like it's ready to go, right? BLDR setting up industrials, right? Right there. BLDR, it's looking good. It's knocking on the door. Anticipatory, maybe I would rather wait till Monday, but I'm thinking about that for sure. BLK, nothing there. BX it's survived earnings, but I'm still going to wait for the next consolidation. I took this one. I'm shutting down for the weekend. I don't know. I'm going to hold not all of it. I'm going to hold one small piece through the weekend to see what happens on that, but mostly shut down. So out of AXP because of earnings. Took City as well. Got it. Okay. It's not moving phenomenally strong. It's doing all right. Caterpillar waiting for the next one. You got earnings coming up. Be careful. Capital One looks just like AXP, COP. There's really nothing there. A little bit of short-term momentum in oil, but nothing that hasn't even gotten to the 50 yet. Costco, it's just knocking on the door, right? It's knocking. Could you just go ahead and say, you know what? I like it. I'm going now. I'm going to put my stop down here. Yeah. I mean, this thing last time, look what it's producing here. It gave 55 points there. It gave 70 points there. Could I get in now, have a stop down here at 674? That's 12 points. 15 points. This thing could easily give us 50, 60 points. It's real strong right now. Open for business. Not full confirmation yet, but so if you decided to wait through the weekend and then see if it's going to, I think it's viable either way. CrowdStrike getting ready. It's getting ready. I'm getting ready. Right? So we've got some things setting up. We've got some things just knocking on the door. This is one of them. It's getting close anytime. Last time it only flagged for 3 days last time. So can we be like, I'm looking for it down here. If you're looking for it down here and it breaks the flag, you're going to miss it. And we've seen that just now. CSX waiting for the next consolidation. Delta, same thing. I don't know. I'm not really into picking lows there after an earnings sell-off, but seems like it's finding some support. The Dow holding up. Elan, I think a few people tried this one, maybe shut it down. That's a tough one. It really never really broke support. So if you're still in it, it makes sense. Fastenal. Oh, there's another one. Sideways, up and down with Elan. Yeah. Here's another one out of the industrial. So you can see industrial seems to have something building up. It's flagging. It's strong. when this selling cycle ends, and I would say I'd be looking for it anywhere between 65 and 68. Early next week, good signal coming there. A couple of those. GE, Google, running out of steam. It's got earnings. I think we're going to have to wait to see what happens. What happens when the bottom shadows are long? That means that there was, like, if you see like here, the sellers pushed it all the way down and then it came back. So in this case, we would consider that kind of like a hammer. You would actually consider that a dragonfly doji. Very similar thought process is that it's ready to fly up. Yay. The Japanese are very creative with their names. So, however, if you see that same candle up here, I would say that's the sellers knocking on the door. That's their first, like, hey, we're coming in. They didn't quite push it. So it depends on where it is. If the candle is in a support area, then we might think the implications are more to the upside. If it's at a resistance area, the implications are more to the downside. So it is contextual, like most candles are. Sideways on Goldman Sachs, Home Depot, viable. That's viable. If you like consumer discretionary, that's the caveat. Consumer discretionary is a little bit more iffy by way of the sectors. Let me jump ahead to this. You can see it's a little more iffy as a sector. It hasn't lost favor, but we have said, hey, there's some concern. So the stock looks good. Retail's been pretty good. That's what you have to look at. That would be viable to take a trade. It's okay. Press took one already on the initial part, in and out. Got it. IBM starting to retrace after its earnings, pulling back a little bit. ICE sideways. Intel gap down. We'll have to wait and see how this thing plays out. IWM holding up. It's holding up in its breakout of its consolidation. I'm okay still. We'll see what happens. JP Morgan looks very much like Citi. Those two move similarly. Meta looks very much like Google. They look similar. Hitting some resistance. This was one I did catch coming out of that flag, not Google though. At this point, close to earnings weekend, hitting resistance, pulling out. Microsoft, I think a few people might have had this same thing. At the weekend, a couple days before earnings, obvious resistance over the last 3 days, volume dropping off. I don't see what you're thinking the prospects are for something like those two. Netflix still seems to be just churning along. A lot of strength in communication services. Nvidia pulling back. Great. If you missed it or if you traded it and have taken profits, pulling back. It's going to give us another bite at the apple. If you're in it, what are you waiting for? What are you looking for? That would be my question. Be specific if you're still holding on. Paccar, what do we have? Another industrial showing strength, higher high after a breakout, hitting some resistance, pullback. What's the pullback going to look? You can see that already it's slowing down. It's not accelerating into the pullback. I think this thing may not drop below 99, but I would be good all the way down here to 98. Anything in that area, we should be ready to potentially see that turn. PNC, some of the financials just really didn't materialize. Right? Just they signaled and then just sputtered. There's no reason to stay in a sputtering trade. Give it a few days. If it hasn't gone yet, you gotta call it, take the loss, keep it small. Q's looks like it wants to roll over. Great. The industrials is already given a pullback, starting to get ready for signs. This one looks like maybe 2-3 days into next week, Tuesday, Wednesday. Starting to turn. Let's see what that does. RCL. It's hard to make out what's going on in this one. I feel like it's sputtering. We'll see. Same thing here. I'm going to bounce this one out. I don't like the way this moved. I didn't take that one. I only took one healthcare, but yeah. SPY, you can see, looks like we're going to close more near the lows for the day. Hitting resistance for the third day. The volume is continuing to drop off. Yeah. Right. What would the expectations be now at this point? We're overbought. It's done enough. Set reasonable expectations for anything that you carry through the weekend. UNP. UNP survived earnings. It actually, from a technical standpoint, broke out. Now it's starting to pull back. The earnings didn't shake it. Look, if this thing can stabilize in there above this level, that's great. I would be good with that. I feel like there's been a resurgence in industrials. That's what we have with this railroad. Let's keep an eye on that. That's a maybe. Here's the VIX. Waste management was a new one I looked at. We'll see if this thing gets a consolidation. I think this is considered industrial. I believe it is. Walmart, hard to decide what's going on with that one. I prefer Costco out of that group right now, that retail consumer discretionary group. Biotechs are part of that sputter in healthcare. They gave a signal. It looked like they were going to try to continue, and it's just failing to materialize. It's not dead yet, but if it breaks below this level here, I think we're going to want to take it out, avoid. We'll see what happens. Yeah, okay. Sorry to hear it, press. XLB materials, not much better. Just kind of failing to get off of this 50-day right now. Not a lot of interest there. Communication services. Oh, looks stupendous. This was already strong and looks to be accelerating. Can communication services and technology accelerate and lead the market? Absolutely yes, 100%. XLB is basic materials. XLB is basic materials. XLI is our industrials. So we'll keep going through. Energy, like I said, there's a little bit of momentum here. Overall, nothing that makes me feel like this is reversing yet, but we'll keep an eye on it. Financials, renewed strength, higher high, no complaints. Industrials, renewed strength, same high. We broke the consolidation. We got back to the old highs. It's got to survive the test that it makes higher lows. And then we think, great, we're back in business. XLK, what? Right? Where our top two best sectors all year have been communication services and technology. They've led us, anytime we've been bullish, these have led us. Do they look like they're shying away from the challenge or accelerating into the challenge? Accelerating. Yeah, this looks great. Strength in communication services, strength in technology, strength in industrials, strength in financials. What do we have in staples? Our defensive. Stable. Stable. We don't see anything here where it's like, oh, watch out. Looks fine. Utilities. Struggling. There's no, oh, we better hurry and move our money into utilities. We don't see that. So our sector score, but we do have concern here. Our consumer discretionary dropped off and it's just kind of meandering sideways. It hasn't started trending down, but it is a little concerning here. So where a week or two ago we were saying it looks like industrials are starting to show a little bit of concern. Now it looks like the consumer that industrials has recovered, but has been replaced by concern on consumer discretionary. So how you allocate trades into these different sectors certainly should be adjusted according to this information. Why I said I like Home Depot, and if I do a retail, a consumer discretionary trade, I'd probably only do one. Okay, there's the closing bell. Well, there it is. It is what it is. Market's closed. We have 2 more days to spend the requisite hour of time on your trading plan. 20 minutes a day, 3 days a week. 30 minutes a day, 2 days a week. An hour, 1 day a week. Whatever it is, you owe me. You are contractually obligated to give me an hour a week on minimum on trading plan development exercises and routines. So you have between now and Sunday morning to wrap up that hour of work on risk management. You can only count 15 minutes of videos. So if you watch 3 videos, it's good, but only 15. The other 45 has to be actual writing and developing your own rules. I know that sounds strict, but I gotta adhere to that. Other than that, I will see you guys on Sunday. Looking for a window. I'm excited. I think we have one coming. It's good to see you all. Have a great rest of your week. I guess actually have a great weekend. See you Sunday and happy trading.